If you're struggling with taking bad setups, you're not alone. This is one of the most common struggles I see in newer traders. Inverse fair value gaps can give you some of the best setups in day trading, but not every setup is worth taking. And if you don't have a clear understanding of liquidity, then you won't be able to filter out the low quality trades. Taking a trade is not just about getting the mechanical liquidity sweep and inverse fair value gap. In order to find better setups, you must look for the current draw on liquidity, then look for a setup to that draw on liquidity. The easiest way to tell the draw on liquidity is if we have a really strong liquidity pool present. So you can see here in this example, we have a news candle here. This is CPI. You can see we have a data wick on the high and the low. If we play price forward, you can see we took out this data high. So now the only strong liquidity pool present is this data low. So I know the draw is going to be this data low because this is one of the strongest liquidity pools and it almost always hits. So if we go forward, let's see if we get a setup to the low. Right here, we get an inverse fair value gap setup to the low, liquidity sweep of this data high, and the inverse fair value gap setup. So why would I like this setup more than other setups? Because this setup aligns with the draw on liquidity, which is obviously this data low, because data lows pretty much always hit. So we'll enter here on this inverse with our take profit at this data low. You can see, boom, right there, TP hits. So with this example, the liquidity pool that we have is LRLR. I'm not going to go over how to spot LRLR in this video, but this right here is LRLR. Now we have a liquidity sweep of this low. And we also have a nice looking 2-minute. I know we had a 1 minute there, but this 2-minute looks a lot nicer and I prefer using the higher time frame. So you can enter right there because this is the inverse fair value gap setup. Again, stop loss is a close below. And for this example, I'm going to target the very top of the LRLR just to show targeting the liquidity pool that we have. You could target higher if you want a better risk to reward. But for this example, I'm only targeting the liquidity pool that we have here. You can see, boom, right there. We kind of just pump through it. Now with this example, I'm going to show you how to deal with having two good opposing liquidity pools. So you can see here, we have these equal lows. And up here, we also have equal highs. So what do I do when I have these two liquidity pools that are strong but oppose each other? What I'm not going to do is I'm not going to gamble and I'm not going to pick and try to guess which one is going to hit first. What I'm going to do is I'm going to wait for one to get swept. Now, to be honest, these equal lows aren't the best equal lows because they're not that spaced out. They're only on the 1 minute. They're not on the 2 minute. But at the end of the day, they're still equal lows. So now what I'm going to do is instead of guessing and picking one, I will wait for one to hit. You can see at market open, we kind of just dumped through these. So now we no longer have these equal lows. What we do have is just these equal highs, and these equal highs are really spaced out. They look really good. And we no longer have equal lows below. So we don't have to worry about equal lows. What we'll do is we'll see if we get a setup. You can see after this big dump, we get a manipulation like right here. And you can see we kind of pump through this. And we get some good momentum here. Now, let me see. Do we have a setup on the 2 minute? No. So what I'll do is I'll take this 1 minute. And just to show that we'd be targeting this liquidity pool, I'm going to do again, stop below. And target at this liquidity pool. Because that's the purpose of this example. So we're going to target this liquidity pool for a 6R. And what you'll do is you just let the trade ride out. Now, do you always have to target the liquidity pool? No. Could you just use it as bias? Yes, you could just use it as bias. Because you see, this liquidity pool is really far. So it did take some time to hit. But you can see it did hit all the way over here. Took a long time. 6.3R. Now, me personally, I would have just used it as a bias and would have been like, okay, I'll take 2R. Maybe I'll leave a runner for the equal high, like leave an extra micro. But again, the point of this example was to show the liquidity pool, and we waited for these equal lows to get swept, before looking for these equal highs. We did not guess which one was going to hit first. We waited patiently for the market to tell us which one it wanted to take. So what do you do if you don't have a good liquidity pool to target? What you're going to want to do is you're going to want to go on to the higher time frame and you're going to do some analysis. So you can see right here on the 15-minute, we inversed this fair value gap, as well as on the 1 hour, we inversed this fair value gap. Now, on top of that, we also have delivery from this fair value gap here. So this is going to tell us that the draw on liquidity is going to be above. So what liquidity do we have above? We have this liquidity and we have this buy side as well. So we know we're at least going to go for this first one, maybe even the second one. Now what I'm going to do is I'm going to look for my setup on the lower time frame. This setup is too far in premium for me, so I'd rather wait to get a pullback. Skip forward, we have a 2-minute here, and this one is also really far in premium that we did get a pullback. So you could have entered here. That would have been a break-even trade. Let's continue skipping forward, see if we get a good pullback. So you can see we get a good pump here. See if we get a pullback. All right, so right here, we do get a pullback for this 1-minute setup. This 1-minute setup gets a very good pullback. So if we were to take this to these highs, this 1-minute here. Now, why am I targeting this high right here? Because price told us that we want to go up by inversing that 15-minute and delivering from the 1 hour. So does this fit the qualifications for our setup? Let's see. So we have the inverse. Okay, so we have delivery from a 3-minute. We have delivery from the 5-minute. So this is a valid setup. We have delivery and we have the inverse for value gap. So what we'll do is we'll enter here. You can see we pump up. So right here, stop loss would be a break even. And you should have taken partials by now, especially if it's this high. I normally take partials at about 1 hour. I know I didn't explain this for any of the other examples. But right here, we took out the first one. And you can see we get stopped at break even. Now, the reason I show this is because this trade actually chops around for a little bit. And yeah, so that's how I would have taken that trade. Would have been stopped at break even with partials. And you can see here, if we waited for this pullback again, you can see we hit buy side. And there's probably a setup somewhere in here. You can see that you could have re-entered on this 5-minute as well, because we still know that we want to take out that buy side. So you could have re-entered here, right there for that buy side as well if you wanted to. And you can see that using the higher time frame, we found a setup to this buy side here. Now, I personally don't take 5 minutes, so I wouldn't have taken this. I would have just been done with that first one. Now, in this example, we just swept this 15-minute sell side here. And we also could be delivering from this 15-minute for value gap. Now, what I will do here is after seeing we swept higher time frame liquidity, also inside of a higher time frame for value gap, I could look for a long setup. So we have a good sweep there and could have possible delivery. So I see these two 1 minutes that I would want to combine because we don't have anything here on the 2-minute. And we have multiple 30 seconds, but I prefer the highest time frame possible. So here we have a 1 minute. So I'm going to look for longs based off of this. So we could do our stop loss below, like that, a close below. And what I would do is based on the higher time frame. We don't really have any liquidity to target here, and I don't really want to target all the way up here. So what I will do when drawing out this trade is I'll just target 2R and I'll use this kind of as a bias. So let's see if we get this. Okay, so right here we close really far above. Still valid though, has not taken this internal liquidity where our break even should be. So still can take the setup, just have to move our target a little bit. So now that would be 2R. So enter in there. TP at 2R, And we know the draw on liquidity should be above because we just swept sell side, delivering from a higher time frame for value gap. You can see, boom. We do end up taking out this buy side. So if you wanted to target that, you could. If you wanted to take full take profit at 2R, leave a runner for that buy side because you were taking a long and we're delivering from the 15-minute, you could have 100% done that. Another thing you can use when looking for the current draw on liquidity is a market maker model. These definitely require their own video, but these can also help you look for where price is going. Also, if we're at all-time highs, longs are usually the best thing to look for. But obviously longing in premium isn't the best idea, so waiting for pullbacks is ideal rather than taking a random long setup. If you enjoy my videos, please subscribe as I'm trying to hit 1,000 subscribers soon. Also leave a like if you guys enjoyed this video and leave a comment if you have any questions. Also join my Discord community. We're trying to build the best day trading Discord community, and I'll see you guys later.